Record. Someone's trying to record. I'm going to record and upload to YouTube, so there's no need for you to do that. So it is very important for you to understand structural breaks. And the reason for that is because a break of structure signifies a lot of things. Either it signifies the trend reversing or it signals the continuation of a trend. Okay? So there's basically two kinds of structural breaks. Okay? And that's a break of structure and a change of character. But both of them don't mean the same thing. They're oftentimes misused. I misuse them a lot myself, but they don't mean the same thing. So, what is a break of structure? A break of structure confirms the continuation of an existing trend by breaking a swing point in the same direction. We talked about swing points yesterday, okay? And so when you see something that says by breaking a swing point, we all know now that is not just any swing point. So those who were here yesterday know the swing point I'm talking about. So a break of structure happens when the swing point is broken in the direction of the trend. So this is it. There's a reason I taught you how to identify trends yesterday, so that when I'm explaining this, you get to understand. So you already know what an uptrend is. So when you see a break of a structural high or a break of a swing point in the direction of the trend, you already know what the trend is. Okay. So if you see a break of structure bullish, you know it's an uptrend. But if you see a break of structure bearish, you simply know that that's a downtrend. Okay. Now, a change of character is an early warning sign of a potential reversal, okay, by breaking a key structural level against the trend. So, we talked about impulsive and corrective waves yesterday. We said the market travels in waves, and the waves form patterns that you recognize, and you're able to say, this is a higher high, this is a higher low, this is a lower high, this is a lower low, okay? So, when you have an impulsive wave in the direction of a trend, and then you have a break of that wave against the trend, that is a change of character. I'm going to explain. Don't worry. Um, Now, the difference between both of them is this: one is a thief, the other one is the signs that the guy wants to be a thief, if you get what I mean. So, the break of structure is when maybe in the house, there's always this person that is stealing things. So, when you start seeing signs of things missing, maybe you keep 500 naira in your pocket, and then you come back and notice that 200 naira is gone. Wow. You now start saying things like, it be like, see, somebody don't, person don't the thief for this house. That's what a change of character does. It's more or less, it be like, say, this trend won't change. It go up, oh, but it won't change. You understand what I'm saying? Then a break of structure is when you already know there is a thief in the house and you know who the thief is. So you're not like, if something gets missing, you already know this is the guy. Okay? Now, another concept we're going to look at, I just want to define all the concepts so that I don't have to come back to the slides. We can jump straight to the charts and I can just show you guys. Now, trends in trends. There's a trend within a trend, and so many of you don't even know that. And that's why most of the time beginners are just seeing weird stuff. You hear somebody say, which was one of the biggest confusion I had, is like on the weekly time frame is bullish, but on the daily is bearish. And then you're starting to ask questions like, when is the main trend? When is it time to buy? Or you start to even say, okay, I've done my analysis. Now entry is my problem. Many of you don't know how to enter into the market. That's why some of you have never even caught a 1:5 in your life before, But so whoever tells you catching a 1:20, 1:100 is impossible, simply doesn't know what it's saying because it can't be done. And if you are dreaming of catching 1:20, 1:100, I want you to know that if it can be dreamt of, it can be built. If you can dream of catching it, you will catch it eventually, one day. So, what next? How do we solve these problems? We solve these problems by internalizing the concepts that I'm about to explain to you guys. Okay? I've shared these concepts with you, I've defined them, and it's time for me to show it to you guys on the charts. So, can you see my screen now? You can see my charts now, okay? Let me know if you can see my chart. Type some W's in the
Yes, I
comments.
can.
Beautiful. You can't see my chart. Let's imagine this is the weekly time frame. Okay? Trend time frame is weekly. Now, if you notice so much when I'm teaching you guys, I don't lay so much emphasis on time frame because price is fractal. Look, if you understand breaks of structure, change of character, you understand trends in trends, you can trade based off a few time frames. I'm not always looking at a lot of time frames because I can look at one time frame and tell you what is going on in the lower time frame. That comes with experience, but whatever you see happening on the 1 minute chart, the same way, see, this is how they say it. If you treat the higher time frame like the smaller time frame long enough, you soon start treating the short term time frame like the higher time frame. It's a saying. I've mixed it up, but that's basically how it is. Okay, so don't get too scared of the 1 minute time frame. A lot of you are. Now, let's imagine this is the weekly time frame. Based on what I've taught you guys yesterday, what trend is this? What trend are we in?
Uptrend.
This uptrend.
Beautiful.
Uptrend.
Higher highs and higher lows.
Yeah.
Now,
Higher lows.
the problem with this is that why you are so confused about the trend most times is because of the way most mentors have taught you about market structure. They've taught you that they've not taught you that this thing doesn't travel in a straight line. This doesn't look like a straight line, but me and you know we don't have the money and the patience to trade off a weekly time frame. So you need to learn about how to correlate the higher time frames and the lower time frames. Now, if you were to take this part of this structure and put it under a microscope as if we were about to perform some form of science experiment, you are going to see. So let's imagine now that we are going from the weekly to the 4 hour or 2 hour time frame or any time frame of your choice. If we were to put this area we've marked under a microscope, this is not what we will get. This is what it will look like. And when it starts looking like this, that is when a lot of you will get confused. I just want to tell you guys something. The difference between a higher time frame and the lower time frame isn't structure. The difference is number of candles. I don't like the fact that I can't see my face. It's kind of weird. Can you guys see my face?
Yeah.
Yes, very well.
You
Yes,
can see your
yes.
face.
Where
Yes,
the
we
fuck
can see
am
your
I?
face.
Ah, maybe I changed the view and I don't know how to change it back. Right? And now I can't see me. You guys should give me 1 second. I'm going to attempt. Oh my God. Shame on me for not.
No shame here, no shame, no shame.
I don't know. This thing was there yesterday, but today it's just disappeared. I really want to see my face, so it feels like I'm talking to myself.
Maybe you could just log off and come back.
Aha! I've seen it. I've seen it. Motherfucker, I've seen you. Yes. I'm looking up. Now I'm looking down. Now I'm looking up. Now I'm looking down. Yeah. No more shame on me. Okay, guys. So are you feeling me? Okay. Now,
Very well.
the only difference between a higher time frame, I'm so sorry, right? I'm going to talk a lot today. Like, I'm going to take out my time to stretch out simple concepts. The reason is that's the only way beginners can understand. That's the only way you can absorb those information. Okay. So I'm going to play a little, show you guys my twisted sense of humor so that you can actually understand what I'm explaining. That's the only way. I don't need to be very serious. So the difference, guys, is simply number of candles. That's the difference. Now, let me show you something very interesting. This thing you see here is not different from what is here. I will delete this box in a second. to show you guys what I want to show you. Okay. What you have here on the weekly is simply impulse and the what? And the retracement and another impulse. Now, what you have on your lower time frame is the same thing here. You have what? Impulse, a retracement, and another impulse. It's the same thing. But the reason why you have so many swing points is because of the number of candles increase. A single weekly candle is 7 daily candles. So imagine what now happens when you've gone down from like weekly to 15 minutes time frame. You will now start seeing a whole lot of trends. But what I need you to understand is don't be scared, because there's a lot of trends inside the trends. So now you've done your analysis on the weekly time frame. Okay? Now, when you've done your analysis on the weekly time frame, you've looked for the guy responsible for breaking structure, and you are asking yourself, how do I enter this trade on the lower time frame? That's what I'm about to show you. That's where break of structure and change of character comes into play. See, let me explain something to you guys that you don't understand. Price doesn't move in a straight line. It moves in waves. Even when you have an impulse, okay? Now, when you have, let me show you guys something quickly. If at any point in time you are confused, just let me know. I'll re-explain myself. Now, look at this here. Give me a second to delete this. I don't know why I can't. Okay, I can delete this drawing. Nice. Look at this now. This is an impulse. This is a retracement. This is an impulse. This is not a higher low until it has successfully caused a break of structure to the left. Okay? Now, what's a break of structure? A break of structure is a break of a swing point in the direction of a trend. This break of structure happened in the direction of a trend. So based on what I taught you yesterday, you find the guy responsible for supplying the momentum that broke the structure to the left. This is the structure to the left. This is the swing point that started this retracement. It ended here. Okay? Ended here. And then this is now the guy responsible for supplying the momentum that defeated this guy. Whoever it is that starts the retracements and form the swing point is the guy responsible for defending that swing point. Do you understand what I'm saying? Like I said before, when a swing point is created and a break of structure happens, price has the right to come back to the guy that started that move or the guy that broke structure. So price has the right to come back here. What will prove to us that this is an uptrend or the uptrend is going to continue is when this guy here is able to defeat this guy and break structure. And even after breaking that structure to the left, price has the right to come back to this guy. Do you understand? I want to know if you understand this phase one. If you understand, let me see W's in the chat. If you don't understand, let me see WW. Okay? Okay? W's only. Beautiful. Let me wait and see if there's anyone that is taking time to type. Aha, a lot of W's. Good. Now, who is Sadiq? What don't you understand? Just mute yourself and ask your question, because you're the only one that typed www, meaning your confusion is times 3. Sadiq.
Please, I don't know if you can re-explain that part. The part
Okay.
where you said the price must come back and retest that position.
So now, stay with me. Stay with me, okay? Let it be very interactive. Don't mute yourself yet. Let me explain something to you. Price travels in waves. It's like the rubber band man. It's like a push and pull movement. If it goes 5 steps forward, it takes 2 steps backward. Now, when it takes 5 steps forward, it stops somewhere and starts to take 2 steps backward. That place where it stops taking the 5 steps forward and started taking the 2 steps back, that is known as a swing point. It forms an area. We believe there is some sort of power that resides there. So look at this. 5 steps forward, 2 steps back, but this is where the move forward ended, and this is the same place where the move backward started.
All 5 you pass again today.
Who the fuck is this?
Yes, now look at them. Sorry.
Unmute yourself, please.
Are you getting me, Sadiq? Okay? Now,
Yes, I'm getting you, sir.
you have a swing point here where the impulse ended and where the retracement began. So you want to mark that area because there's something that's caused price to stop here and start turning back. Now, this is now where this retracement has ended. How do we even know the retracement has ended? Because this guy that started the retracement has been defeated by this guy. Whenever price creates a swing point, it gives you a trading range. Let me give you an example with something that hasn't happened. This is an impulse. This is a retracement. Okay? How do you know this retracement has ended? You do not even know until price has created a new high. So this guy is not even a higher low until a higher high has been created. But one thing is this: when price breaks structure to the left, like this, and then you notice signs of retracement, you want to mark the beginning of that retracement and the beginning of the impulsive move. This range high and this range low gives you a trading range, meaning price has the right to come from here down to this guy to challenge this guy. Do you understand what I'm saying? It gives you a trading range, okay?
Yeah.
Now, once again, when price retraces back into this area here, and then this swing point that is responsible for breaking structure to the left, he has to defend himself and prove to us that he's capable of sustaining this uptrend. Now again, another guy is responsible for bringing the market down. Think about it this way, right? Swing points tell you who's responsible for starting the move, whether it's an impulsive move or a retracement. Exactly. What forms the power that still resides in those swing points after they have done their job of moving price? Okay. This is another question. What forms the power? Now, this is what I believe about the market. We believe that we don't have the money to move the market. Big players have money to move the market, okay? And what they do is, if there is they buy in large orders, but they can't fill their orders at once. So sometimes they hedge themselves. Sometimes they buy to sell. So sometimes, if, for example, they had a lot of sell orders here and hedge against themselves to fill buy orders, they bring price back to this area so that they can close their sell positions here. But the thing is this: what doesn't make sense to me is that if you sold here to buy here and you've come here to close your sell order, meaning the next swing point that is created, you will still have open sell orders there because you need those sell orders to move price up. So I guess that's the reason why price moves in a straight line. But I don't look at the markets and try to have any logical explanation to everything that is happening. What I just want to do is find patterns that are profitable and just trade them. So if you ask questions like this, I can't really give you a defined reason as to why price does that, if you get my point, okay? But we've seen time and time again that price does that. So, Sadiq,
Yes, sir.
are you getting what I'm trying to explain?
Yeah, I'm getting it, sir.
Good. Now, what you guys were never told is that when you have an impulse and you've identified the swing point that is responsible for breaking structure, and you are waiting for price to come back to that swing point, price doesn't come back to that swing point in a straight line. The same way it formed waves on its way up is the same way it forms waves on its way down. So now let's look at this chart so that you understand. So this is one whole impulse leg on the weekly time frame. But if you zoom that impulse leg on a weekly time frame, you are still going to have impulse, retracement, impulse, retracement, impulse, retracement, impulse. So now, the origin of this move is probably sitting down here, which is this area that we've marked. Okay? If you are with me now, you will understand. This straight impulse leg up, this is it. We've broken it down in a higher time frame. And so we are now waiting for price to come back. But let me explain something. A break of structure is when you have impulse, retracement, impulse. This is a break of structure because the break is in the direction of the trend. Okay? The trend is up, and this is the guy responsible for breaking this structure. The guy supplied momentum, but the momentum he supplied is already in the direction of a trend. That is a break of structure. A change of character is, see, this is it here. Your brain is an organ that recognizes pattern. And let me tell you why so many times something catches your attention. Just even sometimes if you're on social media, right? Ask yourself, why did I pause to watch this video? That's because there's something unusual about that video. The moment your brain recognizes something that breaks a pattern it has formed and recognized, it grabs your attention. That's what happens here with the market. Price was making, let me put this here. Price was making higher highs, higher highs, higher highs, higher highs, higher lows, higher lows, higher lows, higher lows. And all of a sudden, when there was this pullback, price tried to form a new high, but the high did not go above this previous high. Instead, this guy that tried to form a new high, price broke this guy. That first break that disrupts the pattern is known as a change of character, meaning the behavior of the market is changing. It's just like a mother that is looking at her child. She's like, this speaking, you don't change, oh. Do you understand what I'm saying? That's exactly what the market is trying to do. And why is the market trying to do that? It's simply because there is an area here that the price is trying to reach, and it cannot do that in a straight line. It's against the rule of price. It can't do that. So what it does is it changes the original pattern of the trend and tries to form a new one. Do you understand? So you have break of structure in the direction of the trend. Instead of this pullback to happen and break this structure to the left here, it didn't break it. In fact, it failed to create a new high. Instead, it created a swing point that brought you to a low that was lower than the former higher low. So now watch this. How do we know the pattern is broken? Higher low, higher low, higher low, higher low, higher low. Instead of higher low to form, you are getting lower low. That is a signal that the trend is about to change. Do you understand?
Yes, sir.
Do you guys understand?
Clearly, sir.
Clear,
Clearly.
clear.
All right.
Yes, sir.
W's in the chat. Okay? Good. So, this thing that I've explained is the reason why on the weekly time frame is bullish, but on the lower time frame is bearish. Is because after that impulsive leg on the weekly time frame, a retracement needs to form. If you are looking at the weekly time frame and it looks bullish, and then you are looking at the lower time frame and it looks bearish, what you are looking at is the retracement of the higher time frame. So now, the question now is, how would you use this to your advantage? So, this is how it is, okay? I always tell people, choose 2 time frames when you're trading. A time frame that you refer to by your own definition as your higher time frame. The job of that time frame you refer to as your higher time frame is to show you direction. Is to tell you where price is going. And the definition of a higher time frame and a lower time frame is subjective. Because I feel where so many of you have failed is you've taken the definition of a higher time frame from a swing trader, and then you that is a scalper, you are applying it to yourself. That's where most of you have failed from. Allow the swing trader to define his higher time frame. Allow yourself as a scalper to define your own lower time frame. So, for me, personally, my higher time frames are weekly and daily. Those are my 2 higher time frames, okay? Sometimes when I'm looking for the direction of the market and it's not clear on the weekly, and I switch to the daily, it is not clear. I don't switch to anything lower than that, because the moment you start trying to make reference over 3-4 time frames, you confuse yourselves. Listen to me, guys. In trading, more does not equal more. Less is actually more. The market doesn't pay you for what you know. It pays you for what you do with what you know. That's why many of you fall into this trap. You study, 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 study. You backtest, 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 and you've seen that what you've studied is happening. But when you take 2 trades and you lose, you're angry and you say the strategy doesn't work. It's not that the strategy doesn't work. It's just that the market doesn't reward. It's just that there is this attachment you have to the outcome of your trade because you feel, I know more than this person. I'm supposed to make more money than this person. It doesn't work like that in trading. In trading, ignorance is bliss. That's why a beginner trader, see, when I started trading, 2019, December, was when I attended my first trading seminar. In fact, those of you in Delta might actually know the guy. I don't know if you guys know Chuko FX, the guy that ran away with our money. That's where I learned how to trade from. And in fact, after trading, I worked there for a while before I left. I was employed as one of the mentors. So maybe those in Delta will probably know him. And that was actually where my trading journey began. That was the first um, you know, trading mentorship I had. But I started trading in September of 2019 by myself. I heard it from a friend and I went to download MetaTrader and I started trading. So I turned $300, $30 to over $300. Why? Beginner's luck. Because I didn't know so much. I didn't know that I have to wait for confirmation or whatever, whatever. If price just reaches where I want to buy, bang, I slam that shit. But the more you start to know, you notice that your performance kind of drops. That's how it is in trading. So don't be concerned about knowing too much, okay? Stay on a few time frame, at least 2 time frames for direction. If direction is not clear on those 2 time frames, just forget about it, okay? Someone asked, "Are you a swing trader?" It depends on how much time I have. Okay, like I said, structure is
How
structure.
are you? He
If I
has
don't
not come
think
back.
I'm
He
all
has
these
not come
niggas,
back.
yeah, I'm soon going to start
Yeah, I
arresting
was
some of
wondering
you.
who opened door. Because I was not expecting anything.
Funny
Hasn't come
enough,
back.
I can't even see who the person is. Okay, I've seen you. Okay, so guys, that's about it. Okay, so 2 time frames for me, daily and weekly. Now, I like to hold my trades. I like to hold my trades. Now, I want to also talk about something. There is a difference between what you want to trade and what you know how to trade. So asking me if I'm a swing trader and then you trying to go and be a swing trader would not make sense. Because what if you are not wired to be a swing trader? What we don't understand is all of us have different personalities, and our personalities and views about life is different and is based on our upbringing. If you grew up in an environment where there's not a lot of risk takers, an environment where they are always asking you to play safe, you probably won't be a risk taker. Except if maybe you associate with those who take risks and then that psychology you have changes. Okay? So that's the truth. I grew up in a family where if I went to fight and I came back home crying, or there's wound or there's blood on my body, my mother is going to ask me about the other child. Not that she's concerned about the other child. She's hoping that this damage she's seeing on my body times 4 times 5 has been done to that child. There was one time I went to fight. I was crying and I was calling. My mom could hear me. My mother said to me in Hausa, she said, "Ka koma inda ka fito, ko ka duke yaron, ko yaron ya duke ka." That's what my mom said to me. Said I should go back to that child that beat me. Is either they take that child to the hospital or they take me to the hospital. Go back there. That's the kind of place I grew up in. So I'll be a risk taker, obviously. And it's the same thing. If you grow up in an environment where wealth around many rich people, okay, wealth is going to be your baseline. That's just it about life. So there is a difference between what you want to trade. Because you see someone trading XAU USD, you now want to trade XAU USD. What if you are not wired to trade XAU USD? What if you're not? Okay? So that's it. It all depends on you. How do you know what you're wired to trade? if I'm in a trade, do I have the patience to wait? Am I able to see a trade go from $0 to $100 in profit to $10 in profit, and I still hold until it gives me 1,000? Because so many of you will want to be catching 1:20 risk to reward, but you don't even know what is involved in catching 1:20. Your trade can move 1:10 in profit and come back to your entry, and you will feel like dying, but you ain't got to do nothing. You just got to sit on your hands and watch that shit go. That's how it is. So that's the point. When we come to psychology, I'm going to talk about that. So 2 time frames as your higher time frame for direction. Your second time frame should just be for entry. It could be a 1 hour time frame, 15 minutes time frame. See, if you teach and train yourself how to trade with just a few time frames, you would see how much better you are going to become. Okay? So, higher time frame for direction. What you are looking for on the higher time frame is, first of all, what phase is the market in? Are we trending? Okay, if we are trending, do we just break structure? Are we making an impulse or are we making a retracement? So I'll give you an example now. If this is a weekly time frame, this is an impulse, break of structure to the left. This is the swing point. Once I've identified the impulsive leg and I confirm there's a break of structure, the next thing I want to identify is the guy responsible for the break. And the guy responsible for the break is either the origin of the move or the decisional swing point. I talked about it yesterday. If you were not here, good for you. So, what you want to do now is mark that area. That area becomes your POI. It becomes your point of interest. Your job is to do nothing until price comes back into that area. And what I want you to know is that price is not going to do that in a straight line. The first thing you will notice when the retracement begins is a change of character. It is doing higher highs and higher lows before. It will now start doing lower highs and lower lows, lower highs and lower lows. When it comes into that area you've marked as your point of interest, you want to wait for that temporary trend on the lower time frame to synchronize with the bullish time frame. What you would be looking for is change of character bullish. Remember, weekly time frame, market is bullish, impulse. You've marked the swing points responsible for breaking structure. You've waited for price to come into your point of interest. What you are waiting for is what we see here. So let's imagine this is the swing point. What we want to wait for is we want to say the last high that brought us into this swing point. We want to see price violate that high. Once we see price has violated the last high that brought us into the low, we want to look for the swing point that is responsible. That is where you are going to place your entry and your stop loss. And your target is going to be for price to create a new high. That, my friends, is how to catch a 1:100, 1:50. But I'll tell you one thing. You will not catch this every day. You may catch it twice a month, once a month, and you will chop many SL before you catch this thing. So don't think I've shown you the blueprint. You just go, you will not manage risk. No, it's not easy like that, oh. But I need to collect my money back from my former mentor. It can't be like saying that now I start learning afresh. Okay, that's a compliment actually, but leave your mentor, let him eat the money. Otilo, obviously it is gone. Do you guys understand what I just explained to you guys? Do you understand? If you understand, let me see W's in the chat. Okay. Some of you are understanding what I'm explaining. See, guys, this is what trading is all about. Forget all those things. People are complicating whatever, guy. See, all you need to do, determine the trend. Are we buying or are we selling? Is the market bullish or bearish? Go to your higher time frame, because levels on the higher time frame hold more weight compared to levels on the lower time frame. So you want to make reference. And see, let me tell you guys, there is a way to play this safe. In fact, let's look at a real chart. I'm done with all these lines and lines and lines and lines I'm drawing on the chart. Okay, I think the 1 hour time frame is fair enough. Or we can even do the 45 minute. I'm going to do a lower time frame for let's even do 30 minutes, because what will prove you understand my concept is if I do it on a lower time frame and you can see. But let's do something. Let's first of all go to the 4-hour time frame. Now, for this analysis, the 4-hour time frame is going to be our higher time frame. And then the 15 minutes is going to be our entry time frame. Okay? So now I'm on the 4-hour time frame. That is my what? That is my higher time frame. So what I want to do on the higher time frame now is to look for anywhere that there are structural breaks and swing points responsible for causing those breaks. And then we'll go down to the 15 minutes time frame or 30 minutes time frame and analyze what happens so that you understand what I'm showing you even more. Now look at this. If you look at this impulse leg here, the move began from here. All right? Started here and ended here. So let's focus on this bullish leg. We want to analyze it. For what we can see lots of impulse retracement, impulse retracement, impulse retracement, impulse retracement. You had an impulse, you had a retracement. Now notice one thing. Every fucking low you see printed is higher than the previous one. Higher low, higher low, higher low, higher low, higher low. We are going to keep marking higher lows until we cannot find any more higher lows. What again do you see here? This was supposed to be a higher low, but that's what I explained to you. When price made this retracement, price was trying to push up and create a high above here, but it couldn't. I want to speak one wrong English now. It didn't just couldn't. It came back and broke this guy that tried
Now
to
confirm
create
English. Now for us to understand. Now confirm English.
exactly. It didn't just couldn't. I don't want to break the
Abi.
flow, right? Yes. It didn't just couldn't. It came back and broke itself. What does that tell you? It signals you that the power that is now in control is this guy right here. This is the king, is the Igwe. Shine Sarkin su yanzu, because he is the guy responsible for supplying the momentum that broke structure. Do you guys understand? Yes or no? So that I can move on to the next stage.
Very well, sir.
Very well. Now, the process by which the recognizable pattern, the higher highs and higher lows were formed, that process where the pattern has now been disrupted is now known as a change of character. Because notice something, from the beginning of this move, we were able to establish a pattern. Low, higher low, higher low, higher low, higher low. Higher low here, higher low here, higher low. But this is not a higher low because until a swing point creates a high above the previous high, that swing point is just a swing point. It is not a higher low. Do you understand? Do
Very
you
well, sir.
understand?
Yes.
Good.
Yes,
So
yes,
that's
sir.
why, yeah. So that's why I was showing you guys yesterday. You need to know that there are different kinds of swing points so that you will not go and be giving significance to a level, because so many of you, what you would have done is when price came back to this area here, you would have been marking that area as an order block, and because you feel the trend is bullish, you would have been buying. But I don't have any reason to call this a point of interest because it never created a higher high. So where you would have even been buying from earlier that would have made sense is this
Never
area
even break
here.
any structure.
Yes. So maybe this would have been where you were buying from, and then it gave you some profit, and by then you would have moved to break even or taking partials. I always advise take some partials, okay? Then maybe you would have been stopped out break even or taking a loss. But price coming back and not breaking any swing point, please don't sell it. Okay? So we have identified our what?
Change your
We have
character.
identified our change of character. Yes, my brother, you're following. God bless you. Remember, we are still on the higher time frame. Oh. We are trying to mark some guys responsible. There is a robbery in your area. Maybe you are working as a detective. Say, nigger, there's a bunch of robbery here. We need you to come over here and find the niggas responsible. So that's what we're trying to do, okay? We're trying to find some niggas responsible for theft. Now, who is the guy responsible for breaking the structure here? This is the guy responsible. We are going to mark him and leave him because we want to later see what Price did. We move forward. We notice that structure has been broken here. The guy responsible for breaking that structure, there are two guys responsible, the origin and the decisional point. We mark them. We now notice this guy came here and came down, he came here. But this guy here could not cause any break of structure. So we are not interested in that guy. He's not the guy we are interested in. We are interested in this other swing point that is responsible for breaking structure. So we'll mark that guy. We've marked 1, 2, 3. The reason we are marking this is because we want to imagine these are points of interest. So we want to see how price behaved coming into those points of interest. Okay? And then we have another guy again here. We mark him. So here now, you can see something. There is a structural break here. And the guy that is kind of responsible for that is this guy here. We're going to mark him. And then here again, we have another guy here that broke this structure to the left. And then we have another guy here that broke this structure to the left. And then we have some other small swing points here, and then we'll see what happens. So now I'm going to switch to the 30-minute time frame, and then I'm going to analyze what price has done inside those points of interest. I'm just going to hope TradingView is going to allow us go all the way back. They will not allow us. So in my entire life as a trader, I've never paid for TradingView Premium. I've paid for Zumo. That's why we can have hours and hours of mentorships without showing you time. But you see this TradingView Premium, not me. This is so sad. Let's try something and see. Okay, so we'll manage the 1 hour time frame, and I'll just show you guys what I want to show you guys on this time frame. Then I would also teach you guys my little trick for identifying whatever. See something, guys. I want you to see something. Let's read this structure together. Look at this, okay? Now, there seems to be something we can call a structural break here. Now, more often times than not, I'm going to call this a liquidity grab because I can't really see candles closing below. I would classify a swing point if I get like a swing point broken, if I get like a 2 hour, 4 hour candle broken above. If I don't get that, it's not really a break of structure to me. But let's imagine that guy that's a break of structure. The origin of this move is here. And that is kind of the area price came to. But if you had sold this point, we would have taken a loss. Why would we take a loss? Because price manipulated the area. In fact, let me delete everything I've put on the chart and then start again. Now, notice something. Notice something. You have this level here, and that level was actually broken. But where I want to take your attention to is here. Look at what price did. Look at what price did. Going back into this area, price did not do so in a straight line. What do you see? Price, first of all, made impulse, retracement, and then finally broke structure. How will you identify this? This is a low that is high. This is a low that is high. Higher low, higher low. I'm trying to show you guys trends in trends that even if you have a point of interest and you think price is going to come back to that area, is not going to do so in a straight line. It's still going to form higher highs and higher lows. If you were watching this chart on the 3-minute and 5-minute time frame, you would have been able to spot buy opportunities. How would you spot buy opportunities? Look at something here. Let's zoom into this chart, for example. If you look at this swing point, okay, this swing point started this move that broke this swing point here. On the lower time frame, this is a break of structure. Who is responsible for that break of structure? This guy here. You would have been able to get a buy opportunity on the 5-minute time frame. Where would have been your target? Your target would have been the origin of the move. Because like I explained yesterday, price is always acting as a magnet. When price creates a swing point and that swing point break a structural point to the left, price will always come back to that place. It won't do so in a straight line. Let's imagine now you didn't get this trade here. Look at what happened. There is an impulse. And if I zoom into this to the left, you will see there is an obvious swing point here, which is represented by the high of the candle. One secret I want to show you guys is this. Now look at this. I'm already explaining to you what is happening on the 3 and 15-minute time frame without actually going there because I understand certain things. This thing that you see as a single candle or a wick on the 1-hour time frame is like 6 candles. So it's going to form a swing point. Always have that at the back of your mind. That is the swing point. And that swing point is broken. Who is the guy responsible? Is always going to be at the bottom of the area. Look at it. Price came back there. Now, let's delete that. We have another swing point here that was broken. And then we kind of have the guy responsible here. I don't know if price came back there, but we'll take a look at it. Okay. See now, look at even something now. That's why I told you yesterday, but I told you guys something, right? I said it's always important to have the higher time frame in mind because irrespective, that's why I talked about good. I remember what I said exactly. I said this thing I'm teaching you is not even a strategy. It's just the fundamentals of understanding how the market works because it doesn't matter whether your strategy is powerful or not. If you get structure wrong, you are not going to be able to make money. And this is it. This is a swing point responsible for causing this break of structure. When price came into that swing point, it respected it, but not for very long. The reason why we want to know the direction of the trend on the higher time frame is the longer you hold on to a trade, the more money you want to make. If you had held on to this trade, you would have made some money, but not so much money. Why? Because on the left, you have a higher time frame point of interest and price has tapped into it. I want to delete this now and show you something. Notice how when price tapped into that swing point, we went from making higher low, higher low, higher low, higher low, higher low to lower low, lower low, lower low, lower low. Immediately price got into that zone to the left, the structure of the market changed. That's when we now started to see what? You saw your change of character here. After your change of character here, who is the guy responsible for changing this character? The guy responsible is sitting right inside here. And if I zoom into this candle right here, that area has been respected. Meaning a move has started here. This guy here now is responsible for breaking this structure here. Look how even in the future, price came and respected that guy. And that was the last time price was there. It respected that guy that started the move and came all the way down. Look at it. And then now look at what we have here now. We have an inducement here. This is the guy responsible for breaking this structure to the left. And what do you see? Price came. Look at it again. Price came here in waves. And when price got here, change of character happened. Price stopped making higher lows, higher lows, higher lows, higher lows. It now broke the structure and started making lower high, lower high, lower high, lower high. You would have been able to catch this move, even if you don't get it to the T here. But your brain based on what I've taught you, would have told you, okay, if I'm not sure about this area, I'm going to wait for a change of character followed by a break of structure, because in this area you had it. This is your change of character here. Structure was broken here. Because why do I think structure is broken there? This to me, this thing here, sorry, let me zoom in. This thing here that looks like a candle on the 1 hour time frame is not a single candle on the 15 and 5 minute. It's like 6 candles. So it's going to form a swing point. And it was broken here. Who is the guy responsible for causing this change of character? This is the guy. So what you want to do now is you want to watch. If I have a change of character here, it doesn't mean you will sell the first point of interest that formed the change of character. You want to wait for the low that brought you there to be broken. This is more or less a confirmation entry, break of structure. Who is the guy responsible for this break of structure? This guy. And what do you see? Price came back all the way there. All the way there. All the way there. Why would I not pay attention to this point of interest? Because let me tell you something. Even looking at it from the 1 hour time frame, if I draw my line here, not a single candle closed below here, meaning I don't have a break of structure on this time frame. You don't have a break of structure on this time frame. But if you look at this here, you can clearly see this 1 hour candle, when it broke bullish, it closed here. This next candle started there. There was no rejection. And then price came back. And then why would I even choose this zone? I won't choose this zone because I taught you guys something yesterday. When this swing point was created, there is no space between this candle and the last candle here. You would see that there was an interaction between the low of this candle and the high of this candle. They have interacted with each other, so there is no space. But if you look at the point of interest up, you would simply see that there is a space between this and this. So I'm interested in that. And then what you now see price did, price, this is the guy responsible for that sponsored the movie. He's the criminal. Now, the low of that candle, draw a line straight up. That is where the interaction happened. That's where it was tapped into. So you would have been able to get an entry here. To God who made me, my stop loss will not be on this high. And I explained to you guys why. My stop loss will probably be around here or even here above the high of this candle. Only God knows the truth. But all of you that were here yesterday, I've shown you my trade. And then what I will aim for is I will look at the higher time frame. This is the low that was created, and I'm expecting price to create a low below this low. That's going to be my target. Internal range liquidity to external range liquidity. We're not going to talk about that today. And then that's when I'll put my take profit. And that's a 1:53. In fact, this is unrealistic to some of you. So let me come down to your level. So that's like a 1:10. Let's make it 1:10. It's generous. Very big stop loss. Easily. But the problem now is this. Every single candle here is a 1 hour candle. Would you have been patient for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17 hours for price to come back into your point of interest? Even if you were patient, would you have waited for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19 hours? Now, this is what I was telling you. Your take profit would have been below here. Price got here, never hit take profit and went back up. Maybe some of you would have even taken a loss on that trade before price now finally broke the structure down. It's easy to look at this and say, I would have held, I would have not held. Me, I don't know if I would have held. But this is the reality of trading. That's the reality. So this is the reason why you are seeing different trends on the higher time frame and lower time frame. It's because you did not understand that within a trend, there is a trend. So all you need to do is go to the higher time frame, find the point of interest, come back to the lower time frame, Wait for price to come into that point of interest you identified on the higher time frame. Then when price starts to dance into it, first thing you want to look for, change of character. You confirm that change of character by a break of structure. And then you start looking for who is the guy responsible, you buy. Who is the guy responsible, you buy. You follow the trend all the way up. So that's it, my guys. I don't know if any of you are still confused. Okay, yeah. He said, when there is understanding, waiting and holding is easy. Do you know why I love this statement? There is a famous saying I know. I think that's my bio on Twitter, if I've not changed. It says, to the man with the hammer, everything is a nail. I want that to sink in. To the man with the hammer, everything is a nail. Once you are with a hammer like this, everything that pokes his head out, you think you want to hammer it. And what is that trying to say? When you don't know what you're looking for, everything starts to become what you're looking for. Every break, every retest starts to look like it's an entry signal for you. If I know I've marked my point of interest on the 4-hour time frame, no matter what price does in that trading range, if it is not in my point of interest, I'm not going to do anything. This thing is very simple. Let me show you guys something. See, on this trend, what would I have done? This is an inducement. Okay? The inducement started the move that broke the structure, meaning this manipulation had an intent. The intention of that was to cause a break of structure. So this I will mark as inducement. Who is the guy responsible for breaking this structure? This guy here. Once you were able to identify the guy responsible, you would have waited for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21 hours to take trading decisions. Once you know what you are looking for, these 21 hours, you will not be on the chart. You will be busy playing football with your friends. Maybe if you have a girlfriend, if you are like me, that's all you give a fuck is work. Today is Saturday, I'm in the office. Yesterday, I left the office by 10 because of you guys. If I had a wife at home now, she would be like, babe, where are you coming from? You're with that babe, Abby. But if you don't give a fuck about all that, and you're interested in buying a GT3 RS before you are 40 years old, you would have been busy doing something else, waiting for price to come to your point of interest. And all you need to do is set an alert. If I hear people that used to say, I've stopped telling people I'm a forex trader. What do you do for a living? Sometimes I will say I sell shoes. Because I cannot start explaining to you that what you know about trading is not what I know. Some of you will be like, forex traders, I heard you guys don't used to sleep. We don't used to sleep. Why wouldn't I sleep? What will stop me from sleeping? I have 21 hours to sleep because I'm waiting for price to get into my point of interest. So that's exactly how you guys are supposed to be trading. I don't want to hear you are spending hours in front of the chart. The only reason why you should spend hours in front of the chart is if you are back testing. And if I'm to be honest with you guys, that's why I said I've never prayed for TradingView Premium. I'm not really a big fan of back testing because it's easy to look at what price has done in the past and think to yourself, I would have bought here, I would have sold here, I would have put my stop loss here. It's easy. I'm not even a fan of demo account. I'm not sure I did demo. What I did was I was on a space yesterday and I was telling some people how I abandoned trading for one whole year. Yes, there was a time I left trading for a year, and one of my friends was the reason I got back to trading. He came to my house one day. In fact, I was just friends with him for the first time. He saw my trading setup. Big 32 inches screen, beautiful keyboard. And he said, guy, you get this kind of setup, you know the trade. And I laughed and told him, if I tell you my story, my brother, you will laugh. That was the guys that made me come back into trading. So that's what it is, guys. A lot of you will see a lot in the market, and then you will have to go through all of that. But it's what it is. Except if maybe you are scouting the 15. Now, let's go to the 15-minute time frame and see if we will be able to apply some of those concepts. I want to make sure I touch on every area because it's important for us to do that. So look at this on the 15-minute time frame. Would we have applied the same concept? Yes, we would have. And the reason for that would be you have an inducement, okay? And then now, one thing to note, on the 1 minute time frame, this right here is a swing point. And then your inducement has broken this swing point. So we have manipulation with intent. Who's the guy responsible? This is the guy. That's where you would have bought from. Entry
Yeah, well done.
and stop loss. Simple and short. Your target is going to be high. Here, internal range liquidity to external range liquidity. Okay? And then what you can see is when price came in, it tapped in, it started going. Can you find other smaller setups inside? Yes, you can find. How would you have found? Look at this. This is a structural point. Is it a break of structure? Yes, it is, because you have the candle close above. Who is the guy responsible? It is this guy. It is not this guy. Price will not come back here. Why? I told you guys yesterday. Who knows why price will not come back here? Let's see if you guys were following. Who knows why?
Price respects the grandfather, the origin.
I mean, why price won't come back there? That's what I'm saying. Why wouldn't price come back there? So the reason why price won't come
Price,
back there, yeah, go ahead.
okay.
Go ahead.
Price
Why won't
usually
price come
tests.
here?
Price
You say
usually
what?
tests the direct swing points.
Okay, that is
And
one.
yeah, and if it fails to defend it, then it cannot go down.
Okay, anybody else?
Yes.
What do you have to say, bro?
Please, can you come again with the question?
Why is it that price will come back to this swing point and not here? Remember, this is the origin. This is the origin of the move, right? So why won't price come down to the origin? Why did price decide to stop here?
Hello, can I answer?
Because
Yeah,
Okay,
go
the
ahead.
price will not come back to retest because
Okay, the reason why price will not come down here, because this particular place that you mark, this up that you mark that price respected, is the one that engineered the break of structure.
And then
And then it has an imbalance there.
and then
I was not on the class, it was just the video I watched today. So
all right. That's brilliant of you. Let me tell you why price will not come back to the origin of the move and why it came back to the decisional point. If you look at this area here, you can basically see that between this candle that was here and this candle that was down here, there was a lot of space, big space, okay? But price has come back to fill that space. If you look, there isn't any other space. There is no other space. But instead, there is a space here. Small space here. But price will not come back here even if there is space here. Why? Because this is not the guy that is responsible for breaking structure. So you do business with him. But if you look at this guy here, the guy that broke structure, this candle right here, and this candle right here. Somebody says space. Type space in the comments. Say space. Just type S. S. If I don't see plenty S, I will not continue. I'll stop. Yes. There's fucking space. Good. And if I extend this line, you can basically see price came and tapped into that area. I would have had entry here, stop loss around here, and then I would have targeted the highs. I would look for the highest point to the left. The highest point to the left. That would have been my take profit. This would have easily been a trade that is a 1:10. But let me show you guys something. Would you have been able to have the patience to wait for price to move from here, come back here and go up? Let me even show you guys something again. Look at this. Price even still gave us another opportunity to enter. Let's say you missed the entry here. There was a break of structure here. Who is the guy responsible for breaking that structure? This is the guy responsible. Price came back there again. Price will always come back to the guy responsible. I didn't make this up. If I had made this up now, I would have been struggling to find a way to explain what I want to explain, but they are just showing themselves. So you can now basically see, that I can just look at the chart on the weekly time frame. Okay, we are bullish, and then I will just come to the 15-minute time frame and trade only based on the 15-minute time frame. This trade now that I showed you guys, both the analysis and the entry, stop loss and take profit, were based on the 15-minute time frame. So what is your excuse? Okay. So any questions? Any questions?
Yes.
I mean,
Yes, I want to know, is there any way to predict at what point we are going to have a new swing point, or where price is going to have a pullback?
Okay. This is a very good question, right? You see that pullback on, right? You can know when you are looking at the higher time frame to the left. So I'll give you an example. I hope I find one. I hope I'm able to find one. So there isn't really one, but let me give you one perfect example here. Now, you can see that when this trend was moving, something serious here caused price to make this move. And imagine now, this is the weekly time frame. This is the guy that is responsible for this move. You can see where price came and respected it. All these people that don't used to move themselves and they are busy talking there.
This is where
You
it
are
says
funny.
mute yourself,
I'm even trying
or
to
I
mute the
kick them
nigga.
out.
All right. So the reason why this nigga had a very serious retracement is because if you look to the left, you are going to see that we just traded into the origin. We just traded into the origin of this move. That's why we had a deep retracement. You can see that this whole move here, like this is the grandpapa that started the move. And what even makes the move valid is this. You had a manipulation here that caused the break of structure. And then you have a little bit of space. So that's why sometimes looking at the higher time frame is very important. Look at it, go back all the way to the left, and look at it and make reference to levels in the past. And then mark those levels. Because let me tell you something. If I had marked this level and then I marked this level and I was buying from here, I know in my head I'm going to stop buying when I reach this level, because this level up is me making reference to a previous level from 5 years ago that has an importance. So that's basically it. To prove my point again, this is a weekly time frame, meaning this move from here to down here is a proper downtrend on a 4-hour. But what would have made you know there is a reversal here is that when you are probably looking at the weekly time frame, you would have probably seen that there is a guy that started the move here. So if I'm selling from here, I know I'm going to stop selling when price gets here. See, this thing I'm showing you is the secret to how to catch 1:50, 1:100. Go to the weekly time frame. Look for, sometimes you will not be lucky that a weekly time frame is entering into a weekly point of interest. If you are that lucky, then cool. Then once you find that, go to 1 hour, 15 minutes, 5 minutes, depending on you. Look for all those change of character, break of structure I told you. Once you get an entry, your take profit is going to be the weekly high. So Entry is going to be on the lower time frame, but take for profit will be a weekly level. That's how you catch those very big moves. Okay. What about
Okay,
those
sir.
little
Thank you.
swing points before the break? Is the last one not decisional swing points? I think I may have moved away from that chart. So I probably won't see what you're asking me.
They go.
All these my Yoruba brothers have started again. Do you guys have a question?
Can I ask
Any
a question?
Yes, Chukudi Paul, go ahead.
Okay, sir, can we also call an order block a support level or a resistance level? Any other?
Yes, you can call it support, resistance, supply, demand. What is a support level? An area where buyers are. What is a
Right
bullish
bound?
order block? An area where buyers are. So forget about
Okay,
the names. Forget
the name.
this thing I'm calling swing point. Swing point is what you people call order blocks. But what made it simple to you guys is the fact that I called it what it is. ICT gave it the name because it's a concept that's unique to him. I can decide to carry this thing now and give it one name. What name would I even give itself? Just like I gave it the name,
Anonymous block.
I call it Ole.
Anonymous
I say
block.
that's the guy that's a hair anonymous block. Seriously, I call it anonymous block. And then it's a concept that is accepted globally. Do we have any questions? I have something I want to show you guys. Something very nice. Okay. You guys said remember the psychology part. I
I have a
will.
question.
Now. Yes, I can hear you. Question.
Okay, my question is sometimes I used to this one is to 50 something take profit. Sometimes I used to try it, but when
Mm.
it almost my take profit, it will just go down and take my stop loss. Is from I made an analysis from the higher time frame, which is that kind of 1 hour or uh, weekly, but it must touch my stop loss after moving
After
close
giving
to
you a
my
lot of
take
profits.
profit.
Yeah, that's the reality of it that nobody talks about.
Yes.
Let me
It's-
let me tell you guys something. All these guys that will show you they've flipped an account from $50 to $1,000 in one running trade. They probably tried it like 10 times, it didn't work. It is the one that work you are seeing. You see this industry, bar? If you guys are wise, do not fall for some bullshit. Let me tell you one thing that helped me. When I got a mentor that was teaching me, it was a guy in South Africa. Um, I left the group when my learning was accelerating. The reason I left the group was because I didn't want anything to influence my trades. Because I was able to blend the concepts he taught me and ICT concepts. So sometimes I'm seeing their point of interest. They are going to be liquidity. But I know this because I've applied ICT's concepts. And I ended up changing my bias because it was my mentor that was speaking. So I had to leave the group. I'm telling you this because there are different phases in learning in Forex. The phase where you are confused, where you find something that seems is working, and then where you stop finding anything. That point where you stop finding anything is when you found something. It has to get to a point where you stop watching YouTube videos and focus on yourself. That's the only way you will learn. This industry, if you want to run mad, spend time online. When you are seeing all these small boys flipping accounts, driving big cars, you would think that you are not making progress. My brother, nobody is coming out from nobody is coming out online to show you the cockroach in their cupboard. Everybody is coming to show you the trades that they've won. Nobody is coming to tell you they've lost. So the whole idea of catching a 1 is to 100, it's nice. It's a nice feeling to see that you risk $10 to make $1,000. But in reality, how many of those trades are you actually catching? It's not a lot. Okay? So don't actually fall for it. if you get my point. It happens realistically, but there's going to be a lot of times when it's not just going to make sense anymore. So, and to be honest with you, you don't even need a 1:5 to be profitable. You need a 1:3, 1:2. There are people that trade with 1:1 and they make money. So you don't need to aim for all those. I don't even aim for all those things anymore right now. Right now, I'm at a point in my life where I'm not even aiming for 5% a month. Do you guys know that? That's where I'm at. I'm at the point where I need 30% a year. This shit gets to a point, right? You would do so well, and please, everyone, document your results online, because from the beginning of this year till now, 70% of the money I've made didn't come from trading. It came from the fact that I'm able to build a personal brand online. It came to the fact that I'm able to put my work out there. There are people with hundreds of thousands of dollars that don't know what to do with it. And unless you put yourself out there, those people cannot find you. There's an investor sitting somewhere with $500,000 that needs only 5% a year on his money. You could be that guy that takes that money. So stop chasing the lifestyle. Stop chasing those people selling you stuff. A guy was in the group thinking, he said, maybe I'm one of those guys that introduces you to a broker for you to lose money. I have a product I sell, and I have a product I will show you to you guys. At the end of the day, it's left for you to buy it or not. But what I know is that I've done right by you. I've taken 2 days of my time to show you guys what would probably change some of you for life. If I ever introduce you to a broker, I'm not doing so for you to lose money. That's what I want you to know. I gain nothing if you lose. And I'm going to explain to you why. Now, I've shown you guys in yesterday's webinar, I turned $700 to thousands of dollars, $100 to $500. And I was able to build a system with that. Because let me explain something to you guys. Everybody interested in the financial markets usually starts by trying to get the right education. And then when they try, they basically see how difficult trading is. And then they will now try to say, okay, let me look for signals. Take signals. Let me explain this and I'll talk about the psychology part. I'm trying to make a point. You probably want to say take signals, but there's a problem with signals. With signals, you have to be online waiting for someone to drop trade. What if you're a student? What if you have a 9 to 5? Another advice I'll give you, do not quit your job to pursue trading. No. Hey, do not see. You people should forget all these Alex Homozy them online that you see, Grant Cardone, Ty Lopez. Do I watch those mentors? I do. Take what they say with a pinch of salt. You when your mama no get basement, now one village for papi una they stay. You want go quit school. You die. America is not here. You need your job. I have shown you guys that you do not need 20 hours a day to trade Forex. No. So because of all those stuff, right? I built a system. It's called Veltrix. Now, I'm trying to make a point, right? I'm not necessarily trying to sell you anything. I'm trying to sell you something, but I'm not selling you. And there's nothing I'm going to show you guys that I will tell you to give me your money. No, there's none. Just watch. I'm trying to show you guys something interesting. Let me put this here so that you see what I'm trying to show you. Okay. Can you guys see my screen? Let me know if you can see my screen, please.
Yes, I can see your screen.
Okay, let me move this all the way here. Now, I've not even had time to do a proper graphic design and stuff like that, but I designed a system. It's called Veltrix. What Veltrix does is that it's not all those trading robots. It's not a trading robot. It's a trading system that is supervised by a human being. This is not all those robots that will wake up 2 o'clock in the night is trading. No, it is trained on the strategies I've used to grow small accounts and large accounts. This thing aims for between 3 to 5% monthly and 30% a year. Now, this is it. I'm not selling you this, but I will give you access to this. The only time I take money from you is when this thing performs. Do you understand what I'm saying? If you connect to these Veltrix that I'm showing you, if you make $100 in a month, you give me $40 and keep $60. Is that not fair? So tell me now, when someone said he's thinking, when someone said he's thinking, oh, can you hear me now? I think it's a network.
It's your network. I can hear him clearly.
Oh, it's his network, right?
I can hear you clearly.
Okay. So Arnold, I thank God Arnold is here. So do not think I'll bring you something and then I'll collect $1,000 from you and tell you bring $1,000, I'm selling you a system. No, this is a performance-based system. There is no hidden fees. The only money you are going to pay is $30 and it is for 1 year. That $30 is for VPS so that your trading account stays active even when you are not online. You pay that $30, I cannot ask you for money again. If you even pay that $30 and you want to connect 100 accounts to that VPS, you can connect it. It's a 60-40 split. You keep 40%, I keep 60. You keep 60%, I keep 40%. To minimize the risk, it is built to trade only currencies, no cryptocurrency, no gold, because all those things are volatile. To be honest with you, for you to manage risk properly and trade gold, you need about $1,000. But with $100, you can trade currencies. This is what this system is designed for. For now, it's only available on currencies. But next year, we are going to launch the one that can trade gold and crypto, and we'll also launch the one that can trade synthetic indices. So tell me, if I don't care about the security of your money, if I'm introducing you to a broker to lose money for me to gain, I would have told you bring your $50 and put. I connect gold. 500 pip move, your $50 is gone. And I would have been charging you monthly subscription, but there is no monthly subscription. If the system makes money, I make money, you make money. If there is no money for that month, the profit split doesn't happen. So I needed you to see this as something that is powerful. It is performance-based, currencies only. Now that's about this. What is the minimum deposit? I want to reduce the barrier to entry. Instead of $300 minimum deposit, I have brought this down to around $150. And the reason is because I want it to be safe. If possible, 150. I don't want you to lose your money, so please don't bring your $50 so that your money doesn't go. Now, I want you to imagine something. This stuff is good for compounding. Imagine if this stuff gives you extra 10%, 5% on your $100 every month. By the end of a year, you're probably going to have around $300 from $100. And let's say you decide to even make things interesting. If this system is giving you 5% monthly and you are also compounding 5%, maybe you start with $150. At the end of month one, you make 5%. Then maybe from your salary, you add into it. Before you know, after 1 year, your $100 might be $500 because the risk is adjusted based on the size of the account. If someone funds $1,000 and connects to the system, the risk is not going to be the same with someone trading with $100. So the more money you have, the risk ups itself. Very, very perfect system. 60-40 profit split. It is a performance base. The only thing you pay for is VPS. And let me tell you something. This VPS you are paying for, I'm almost taking a loss for it. I don't think there's any company that is giving a VPS subscription for $30 a year. Go and find out. So there's nothing about you losing money here and I make money. Now, let me show you guys something. Some of you are interested in learning how to trade yourself. If you deposit $100 with a broker that I've partnered with, I will give you access to trading resources. I will come online once in a month and check in on you, just like this on a live call. How are you guys doing? Is your strategy working? Once in a month. And every Monday, we'll be having live analysis. If you deposit up to $200, this money is not my money, it's money you can remove. If you can deposit up to $200, I will give you the content, the resources, and give you access to this. That's all, both of them. So those are the two things I have for you. But then again, if you are someone that thinks, oh, checking in with this guy once a month is not enough for me, I want to sign up to his mentorship or his academy or anything, you can reach out to me and ask me for my mentorship, and I'll give you a price and say, this is how much I charge to teach you. Otherwise, I don't want you to give me any money. Now, some of you will ask, will I make money if you use my broker? Yes, I will make percentage, and I'll tell you how I make money. When you place a trade, no matter how sniper your entry is, your trade always starts in a loss because the broker charges you something called swap and spread. Okay? When you place a trade, the broker gives me a percentage of that spread. That is the only money I'm getting. Now, you tell me yourself, if you blow your trading account, where will I be seeing spread and swap to make money from? I won't be seeing it from anywhere. So I need you guys to zero your mind and think everybody trying to introduce you to a system or a broker is trying to take your money. No. This stuff is for you guys to use. Students, whatever, focus on learning. You deposit $200, I will give you access to resources and connect you to the system. Even if it's 20 months it's taking you to learn how to trade Forex, the system is compounding your $200 and you are still learning how to trade. Simple and short. I don't have anything else to tell you guys again. So if this is something you're interested in, you can reach out to me. If it is not something you're interested in, you are not obligated to pay me any money, but I believe that I've done right by you and I've given you something valuable. This person asked, is the 60/40 takes effect on the 10% monthly return? Yes. So if let's say you deposit $1,000 and we make $100 that month, we are going to take a profit from the $100, 40%. If you want to leave your profits in the account for it to compound, you can do that. The next month we will do a profit split. It's not going to be from your $60 that you left. It's going to be from the new profits for the month so that your money can actually compound. Yeah, that's about that. Does anyone have any questions about the webinar we did or about what I just showed you guys? If you guys have any questions, let me answer your questions. Do you guys have any questions?
Sir, I would have hoped you could maybe probably do an example for people like us who are scalpers and day traders. So the 5 minutes entry down to the 1 hour, up to the 1 hour lookout.
It's the same thing I explained to you, right? I think I've shown you that already. If you're a scalper, choose a time frame to be your higher time frame or your lower time frame. For your higher time frame would be between 2 hours and 4 hours. Let me look at so that's the same thing. Let's say this is your higher time frame now. You can basically see we're on the 2 hour time. This is coming off the origin of this move. And what you can actually see again, if I switch to the 15-minute time frame, I'm going to see that this is the swing point that brought me down here. That's the swing point that actually broke structure. And then we are coming off a higher point of interest from a higher time frame. And you can now see that this guy has been broken here. So your job is now to find the guy that is responsible. And obviously, I want to go back to the 1 hour time frame to look at that. Good. So if I go back to the 1 hour time frame to look at that, it is very clear to me that this is my point of interest here. because I can see that there is space here. So my entry is here, my stop loss is below the level, and I'll take the trade. Okay. So the 2 days, even if you're a scalper or you're a swing trader, you still have to wait and spend some time. Okay. You still have
Okay, sir.
to wait. Someone said, is there a limited time to align with the opportunity? Arnold, you can unmute and ask me a question. Which opportunity are you talking about? Is it the trading system you're talking about?
For the victory.
Okay, on Veltrix, there's not a limited time. There's not a limited time. If you want to start today, you can start end of the month. You guys have no idea the plans I have for you guys in this group. I have a lot of activities coming up that you guys will make money. There's a program we're going to start 3 months before December. So you guys should start saving money. We are going to launch a festival. It's called the PEEP Festival. It's to help people who have families, students who are trying to raise money to celebrate Christmas. Any amount you can fund, $50, $100, you fund the account. I don't want $50 because you will likely blow your account. I don't want that. So $100, $200, $1,000. We'll set a target. October, November, December. We make money, we all withdraw. Everyone is happy. So if you're interested in the system, you can DM me to get it. The only thing you are paying me for is the VPS subscription fee. Once you subscribe to VPS, you set up your account. You will fund the account yourself. You are not giving me your money. You create an account, verify with your own ID, fund it. Anytime you want to withdraw, you can withdraw. Withdrawal takes 5 minutes, 10 minutes. It's Cora Pay. But if you use crypto, it might take a while. So, and also if you don't have up to $200 to get access to the system, you can fund $100 and then I'll give you access to the resources. And then once a month, I'll do a check-in with you. But if you feel you need mentorship, you need me to guide you, because obviously, when you sign up for that mentorship, the main thing you're actually paying for is my time, because I have to leave a lot of things I'm doing to guide you and have time for you. So it's not like you are giving me money, because the basics are given to you free already. You have them already. So that's for you. You can do whatever you like. Okay. So back to the lady that was talking, you can already see that this is a 1 hour time frame I'm looking at, and this is USD JPY. So what I'm personally expecting for this week on USD JPY is I can see this area here. There's a little bit of space here. So I want to mark that place. And then going into Monday, I want to see what price does. If price comes back into the area, I'm going to look for buys. But I want to teach you guys something that I've not taught you. And that's why I feel it is nice for you to get the resources. There's something called efficiency of the pullback. This right here is an area where would likely cause sales to happen. Let me mark that area. Efficiency of the pullback. So this is it. Price is now sitting between two areas. An area potentially for sales and an area potentially for buys. If price gets to this area first, before coming back here, I'm not going to buy this because order flow would have changed by then. So I'm not going to buy it. Okay? It's called efficiency of a pullback. There isn't enough time for me to explain the whole thing to you guys. So, but personally, I'm looking at buys on GJ. The reason I'm looking for buys is because look at how GJ behaves. GBP JPY falls very fast. Look at this. It falls down very fast and then takes its time to recover. That's what it does. So if you go back, you would see it. It falls down very strong. Look at this. All the way down, and then it takes its time to recover. Okay? So very beautiful trades on GJ if you trade GJ. Oh, I thought this was GJ. This USD JPY. Oh, it looks very similar to GBP JPY. Let me look at GJ. Yeah, you see, it looks very similar. And then you can already see now that we're sitting above an area that will probably send price down. But I'll still buy below here because I believe since we have a lot of space here and there was an inducement here, before the break of structure to the left, and then you have space, I clearly believe price is going to come back all the way here. So one thing I'll do is, if this level holds and sends price down, I'm going to buy from here, and this will be my take profit. I won't aim for the highs because a lot of structure has been broken here. So we might probably be bearish. I don't know. And if you look at the monthly on GG as well, you will see something. The area we are reacting off is a support that is now becoming resistance. So maybe that's why we are seeing. And then if you look at it again, look at this candle here and here. There is space, big space. There is no space up here. That's why I don't think price is going to come up. There's space here. We are sitting at a support that is now resistance. And since price has filled that space, look at it to the T, it tapped into the space and then gave us this reaction. So I kind of feel we may be heading down or so. I don't know. I'm just gonna keep watching what price is doing. I'm not gonna guess for myself. Okay. So you guys, I'll keep you guys posted. For those who are total beginners who know nothing about Forex, I'm still going to have a webinar with you guys maybe next week. But I have a seminar I've been invited to speak at. So if I get back from that seminar on time, I'll probably have a webinar with the beginners. And then even after that, for you guys that have experience, I'll still have another webinar for you guys. But that's about it. Any more
Thank you, sir.
questions? Any more
Yeah,
questions?
so I have a question, sir.
Yeah.
I think yesterday you talked about there's a pre-recorded video, training video that you set aside for us. So
Yeah,
I
that's
don't
what
know
I
if
was.
that video is still available.
You mean for yesterday's training or the ones I promised you?
No, the one you promised, the one you promised.
That's what I'm saying now. If you have been listening to what I was saying to you since, I said if you want access to those resources, all you need to do is create a trading account and deposit $100 in it. I'm going to give you, it's your money, you can remove it. I'm going to give you those trading resources. It's about 12 modules. And then once a month, I'll also be checking in live with you. And then I'm also going to make sure you don't blow that your account that you fund. So every Monday, I'll do live analysis with you. But if you have up to $200 and you fund the $200, I'm going to give you access to this Veltrix system so that you focus on learning how to trade, and then Veltrix will just keep compounding your money monthly. Okay. Somebody said
Okay.
reminder about trading psychology. Now, I want you guys to understand something.
Sorry, sir. I have a question.
Yeah, what's your question?
The Victories, is it not the one you said within a 150 or 100, somebody can copy your trade?
You said the Veltrix is what?
Is the one you said that maybe with 100 or 150, somebody can copy your trade?
No, I said
But I heard you
150 or
say 200 now.
150 or 200. Sorry, 150, 200. Maybe I made a
150.
mistake.
200.
Yeah,
And that
between
should be the one of 150 should be like 180 because the cost of VPS.
yes, 180 plus cost of VPS. Yes. And to be honest with you, right? I think after this month or next month, we'll have to raise the prices of VPS to $50 because of all this AI, whatever, there's a demand for it and the prices are all going up. Because right now, this is a new company I started. It's a system I started, and the whole goal with this goes back to what I'm about to share with you guys. That's the psychology aspect. When I started trading, I had two problems. I had the problem of affording mentorship and funding my trading account. If you deposit $100 into the broker's account, you've been able to worry about funding your trading account. You don't have to worry about mentorship because you fund your account, I give you the recordings. And if maybe you're a student and then you need an extra income on the side, for a student, even $20 a month is something. The Veltrix system is going to help you do that. There is nobody in this industry that's going to give you this. All of those guys introducing you to brokers and you are losing your money are just giving you a bunch of shit that doesn't work. If you're interested in seeing the track record for Veltrix, I can show you. In fact, the first time we tested Veltrix, within 6 months, it did 100%, $500 to $1,000. But I was not satisfied because that is too much. It's too risky. Any mentor telling you that they are making 100% a year, I don't want to say they are liars, but guy, it's not consistent over the long run, bro. That's why investment bankers will never promise an investor. How much does a bank give you? 10%, 14% a year? Do you think they are mad people? So this system, if you are trying to grow your $100 to $20,000, this system is not for you. And in fact, trading is not even for you. Carry your wahala and go somewhere. But if you are interested in learning, because let's be very honest, guys, trading takes time. Whether you like it or not, it's going to take a while for you to understand how it is. And what drains most people is the little $100 they are making every month, they are putting it into trading and blowing it. This system is going to even help you keep your money. Like I said, this is low risk. It's designed for currencies. We want to test this out. A lot of people use it. They are happy. And we are currently testing the one for gold and crypto. So that those who want crypto and gold will have it. Those who want synthetic indices will have it. And by that time, I'm probably not going to give this out for free. I could easily sell this software for $1,000 if I wanted to. I could easily tell you, pay me $100 a month, and I don't give a fuck about how much you put in your trading account. But every month you pay me $100. But I said, no, I'm going to give you 60%. I take 40%. I'm even taking a loss on the VPS subscription just to make sure I give you guys the necessary support. In all these things, you are not giving me money. It's only the little money commissions I'm going to make from the broker. That's all. And that's enough for me because I made a lot of money trading. So I don't need you to lose money for me to lose. If you even go to my page, I make a lot of content about anybody telling you, any trader that is introducing you to a broker and see, I'll give you an example. You see all those guys that used to shout tier lot size, tier lot size. Many of them have affiliate deals with brokers and is a way for them to make you blow your account. They will show you with $50, they open 10 positions on gold. Before you know, you too want to go and open 10 positions on gold. You're going to lose your money to them, bro. That's the truth. So, if you want access to the resources, deposit at least $100 and you get access to the resources. You get access to Monday live sessions and once a month check-ins. If you have up to $150, $200, you get access to Veltrix system and you also get access to the educational resources. So all is yours. You take it. And if you don't have that kind of money now, you can save. Stop funding $10, $20. That your money will never become anything in the future. That's the truth. If you really want to make money trading, your $10 is not going to get you anywhere. Your $50 won't. Even your $100 is just, to sustain you for a while because 30% of $100 a year is $30. That's not going to do a lot for you. But it is better you have $30 added to your $100 than for you to lose your money by the end of the year. What's the guarantee level that the fund is safe in Veltrix system and it won't blow your account? I don't know how to guarantee you this. Okay, yes, there is a way to guarantee you this. Now, let me teach you what nobody has taught you. If an investor wants to collect money from you, there's something called a track record. That track record has certain numbers. Don't let anybody show you MT5. I $400 turn it to $10,000. They should show you the back end. The back end has figures like return volatility, Sharpe ratio, risk factor, recovery factor. Those are the numbers that show you the real performance, max drawdown. So let me give you an example. If I have a $1,000 account connected to Veltrix and the max drawdown of that $1,000 account is like 5%. 5% of $1,000 is $50. That max drawdown simply means the lowest or highest drawdown Veltrix system has entered. The loss, the total loss. If a $1,000 account can give you a 5% max drawdown, it means even if you fund $100 and connect it to Veltrix, it won't blow your account. So that's how you know that a strategy is safe. So that's why I keep telling you guys, all these other traders showing you 1:100, showing you they flip $100 to $10,000. If they can show you the return volatility and the risk factor, you are going to see that none of those traders are profitable. But I can show you guys all those numbers if you are interested in the system. So your money is not going to go anywhere. And then again, to even guarantee you the account won't be blown, we've restricted trading gold, strictly currencies. Unless if you are using something like one lot size on a $200 account, there's no way currency is going to blow your $100 account if you are trading 0.01, 0.02. So that's just about it. Okay? Any more questions? Arnold, are you satisfied? It seems like you've blown a lot of money in all these things because all these questions you are asking. Arnold.
Not really, because that I've done copy trading most times, and there was this
It's
time I
not
gave them a
profitable. It's not profitable,
yes.
right?
They,
Yeah.
they will make like 300, and they
Yeah.
will lose 500.
Yeah, no. Our
It doesn't
system is
make sense.
good. Now, that thing you just talked about is return volatility, right? If return volatility is very high, that means the account loses $10. So let's say you have $100, and if you lose $10 of $100, that's 10% of your account. If an account loses $10, makes $30, loses $40, makes $50, the return volatility is going to be high. You don't want to see that. The return volatility has to be low. That shows you that the equity curve. You see, now I'm teaching you guys what nobody in this industry is going to teach you. I'm sure some of you have never even heard about all these figures, but that's to really show you guys that I've taken my 6 years of experience and I've built a system with it that is backed by facts. I'm not coming to promise you dreams that I will turn your $100 to $1,000 in a year. No, this is a business for me. Okay, I want this system to be in the level of FTMO and the rest of them in the coming years. So it's a very, very good system that you can make profits with. So if you even go and read about investment, risk factor, return volatility, maximum adverse excursion, recovery factor, Shapi ratio, check all those things. That's how you know someone that knows about trading. Not all your guys promising you $1,000. Any questions?
Okay. You said you was going to show me how you make your charts look so clear and simple. Don't know if you
Yeah.
could do that now.
Send me a DM. I'm going to send you the settings. It's a setting.
I did. I actually did send you a DM though.
All right, send me a DM after this one, and then I would set it up for you. Okay.
All right. Thank you.
All right, guys. Are we good?
Yes, boss, we are.
All right. So I'll see you
Yes,
guys. Okay.
I am. Thank
All
you
right.
so much. Looking forward to the next. If
This
there will
guy
be a
said
next.
now is a good time to key in because I see minimum amount for the access Veltrix to get up to $1,000. You guys don't even know what happened. For Veltrix, I had to bring it down to it was $300 before, and this was not even the system we were designing before. It was meant to be $1,000 less. So I'm telling you that now to a few months, when the other system is out, we are going to remove this system. It's only those that are existing users that are going to be in it because there's no need for me to have a $300 system and a $1,000 system when the $1,000 system can do what the $300 system can do. There will be no need. It's going to cost me a lot of money for marketing. So we'll consolidate everything into one system. So you can take advantage of it. If you have up to 150, in fact, if you have up to $100, try your luck. That's what I can do for you guys. $100, you pay for VPS. That's total $130. Just try your luck with the system. The returns might not be a lot, but it's going to show you the potential of what Veltrix can do, and it's going to show you the potential of what I've also taught you. So I need to go sleep now. I'm so tired. I'll see you guys next week. Okay.
All right. Thank you. Thank you so much,
All right,
sir.
guys. Thank you for showing up. Yeah.